All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and with me today, of course, fan favorite Greg Magadini, co-founder of Genesis Volatility, and now director of derivatives at Amber Data. Greg, thanks for coming back on the show. How you doing?
Doing great. Thanks for having me on, Ryan. It's always a pleasure to be on.
Absolutely. It's good to see you, and we have a lot to talk about. I think when we last caught up, that was about a month ago, I think April 23rd to be exact. There was a bit more positive sentiment in the market, if I recall. Bitcoin trading back above 90 or so. A lot's changed since then. What do you make of the price action? What are you seeing out there?
Yeah, I mean, we're getting kind of just a nice climb higher in sort of the spot prices for Bitcoin. So to me, this is doing what it's supposed to do type of deal. So I like that. And in terms of the vol markets, there's still interesting opportunity there. We have a very steep contango term structure. We're kind of hanging out right below all-time highs. Implied vol and realized vol are kind of at lows year to date. And I have a hard time not seeing, if we get that breakthrough to new all-time highs, to be kind of a mover and shaker type of event. So there's, things might be lining up. Like it might be a vol trap too. So keep that in mind. But I think we're getting towards that inflection point where things are getting really interesting again.
What do you make of the low volatility here? When I look at Bitcoin, I've got an implied vol, let's say, closer to 40%, 50% or so. A little bit different when I look at ETH. And then we often like to just kind of measure where that is on, let's say, a 1 year basis, a 6 month basis, what have you, but just kind of get a sense of, where is that within the range? And you look at Bitcoin implied volatility, and as you alluded to, or as you mentioned, it's right there near the low end of the range. At the same time, you've got Bitcoin prices that are pushing towards almost new all-time highs. We've got a range of about 75 to 110 or so here on the screen. But what do you make of the low volatility? Is it here to stay? Is this a reflection of institutional participation and kind of the maturation of the space? Or is it only a matter of time until we're back at 100% implied vol for Bitcoin?
Yeah, that's a great question. I would say your point about the institutional activity, those are kind of the structural flows. I do think the structural flows are a downward pressure on volatility as the asset class matures. But I wouldn't discount sort of the cyclical moments that we can get. Maybe I could just share one of my charts here. I have a chart showing the implied versus realized volatility. So this is the 7-day implied versus the 7-day realized year to date. So just as we talked about, we're really at these year-to-date lows, realized and call it the 35 handle. They're very short-dated, implied around 35. As you mentioned, sort of the 30 days, more around the 40 range. So this is kind of interesting for a couple of reasons. One is there's the absolute level of vol, but then there's the variance risk premium, which is actually pretty narrow here. There's not a lot of implied premium to the realized, which is usually what you're selling implied for, is to capture that. And then something else that's really interesting is if you look at the term structure, the front end here is very cheap, or is the lowest part of the curve. And if I go ahead and contextualize that historically speaking, you can see this chart here. It's looking at the backwardation / contango extent through all the relative markets. 1.0 is a perfectly flat term structure. When we have these vol events, call it COVID or FTX bankruptcy, we get about a 1.32 sort of top formation, which means the front end is 30% more expensive than the mid, which is 30% more expensive than the back, so on and so forth. But today we're kind of at near that lower end of steep contango. So I do think this is something to keep in mind in terms of opportunities. And if I look at this nice little chart we have here, that's showing us past implied versus current realized, which is giving us the realized variance risk premium. We can see that vol buyers are starting to get paid here on the front end. Back end stuff, 60 days out, 30 days out, vol buyers definitely overpaid for realized, but we're kind of getting a little bit of that turning point in the front end. And I do think if we're making new all-time highs, and we're not there yet, but if we are going to make new all-time highs, once we're in that territory, it's hard to call tops. And I think there's a lot of momentum behind it.
You mentioned a volatility trap earlier, is that a scenario where, sure, at this point, it looks like we, certainly have lower implied volatility levels. It could be cheap. Is that volatility trap a scenario in which it actually doesn't get more expensive from here, and it could get possibly cheaper on those longer dated options? So even though you're going out, you're buying a leap, you're buying something with a little bit more time, it actually gets a bit cheaper.
Yep. So that's kind of the thinking that I have in mind. I'm more thinking of the medium term to short term. So with that steep contango, you might be tempted to buy 30 days out, 60 days out, but don't forget, you're not only paying theta, you're paying roll down vega on that contango. So as we approach maturities, you kind of have that exponentially decaying theta, but you also have vega points leaking out of the market. So there's a lot of cost to being long fall in that scenario. And then something else to keep in mind is, we've seen these patterns before where assets make new all-time highs. Sometimes they consolidate right below that all-time high for longer than expected, which is very much a vol contraction type of move. So I would keep those things in mind. I'm very interested in sort of the upside, delta upside vega, as we're making new all-time highs, as opposed to anticipating a break of the all-time highs.
Okay, so you're kind of waiting then for, let's say we get the break of 110, and then you'd be a little bit more active in terms of going out and buying some of those options if that's your strategy?
Yep, I think that's a better way to play that.
What other strategies would you look at using here, to maybe offset some of that that theta decay, or is there anything else that you'd look to do kind of with the current setup?
Yeah, so I mean that's a really good question, Ryan, because you wouldn't know it from my 2 appearances here on the show so far, but I typically like to trade short vol structures a lot better than I like to trade long vol structures.
Okay.
There's just something about, the long vol profitable profile is you buy something and you got to make the 10x, because the other 9x it loses, the other 9 times it loses 100%. So you got to be able to hold winners for a while for the long vol to pay off in the long run. And so typically that's not my favorite type of structure, but as of right now, those are the 2 opportunities that I see. We talked about the long dated IBIT leaps last time I was on the show. That's still a position that I think is really good. And then here, kind of breaking these all-time highs, I like to play the options market a little bit better as opposed to the futures market or the spot market, just because there's just a little bit less spike down risk, shakeout risk from a levered long futures position than there is with just a long options position. But in terms of offsetting that, I would still probably keep it simple on my side here with this type of trade.
Awesome. Yeah, since the last time you were on the show, Greg, I actually went out and bought some longer dated IBIT calls myself, and they're working out. I've tried to kind of bounce around in some shorter term stuff, and what's nice about those options, obviously, you've got weekly expiries, but I've tried to offset a little bit of the theta decay. Fortunately, there's not too much in there at the moment, but kind of followed you into that, and appreciate the trade idea. Yeah, forgive me as I bounce all over here, too. I've got a lot of questions for you.
Fantastic.
So when we go back to, I guess just looking at what's on the screen here, we've got, I believe this is looking at data that's coming from Deribit. Is that right?
Yes, Deribit data, yeah.
Is it fair to say that you would see, or you're seeing the same thing in IBIT options? So a lot of what we're talking about, term structure and contango, some of the strategies that you could use in these environments, would that be applicable to IBIT as well?
Yep, absolutely.
Awesome. I think we got it loading on the screen here.
Yep. Bring this up here. So we can see that kind of term structure here right now in IBIT. And the vol is very similarly priced.
So when you go back to your personal portfolio construction, I know you've mentioned that you typically trade shorter dated stuff, and mostly you're in the options market. Do you carry spot positions? Do you ever trade other derivatives such as futures? Like, how else do you approach the market? Or are you primarily just trading options?
There's a few markets that I trade. So I'll trade some equity options here and there once in a while, but I usually trade S&P 500 future options, gold future options, CME yen future options, and then IBIT equity options. Those are kind of the main instruments that I trade. I'll trade some NVIDIA here and there once in a while, but that's basically a SPY option in a lot of senses. And then once in a while, I'll have like an equity bias. But I usually stick to the option market for the exception of very wide markets. If I really want to trade something that's kind of a off the beaten path idea and the equity is just much more liquid, I'll trade the equity in that case. But the reason why I trade options, even for delta plays, is because there's just always a shakeout risk in any type of asset. And I've seen it so many times where you get like this wick that kind of, any prudent risk management strategy would cause you to essentially cover your position. And it's always just hard to get back in after you just got wicked out like that. And that's what I like about options. Just that risk is not necessarily the same.
What about kind of longer term, I guess, investments in crypto specifically? Do you hold positions in anything outside of Bitcoin? Do you have any spot positions where you're looking at this as a longer term trade, whether it's 1 year, 5 years, et cetera? Like, how do you think about that if you trade those positions?
So when I was a younger man, yes, I did, and I had longer term positions. Today, no, I don't. All the money I made in crypto, I put it in real estate and put it in bonds and just use that as income. And the way that I trade my portfolio, I trade pretty aggressively and I take the profits out every year and I put it in safe assets.
Awesome. Makes sense. I'm sure, though, you still have a Bitcoin price target or maybe other price targets in your mind. When you look out, let's say over the next 6 months or so, right? We've had a ton of noise over the last month. Tariffs, recession fears, the kind of ongoing trade war as well related to the tariffs. We just recently got the U.S. debt downgrade from Moody's following Fitch and the S&P over the last couple of years, though arguably, given price action today, it's hard to say that matters much. But when you look at everything going on and you look at kind of the resilience of the Bitcoin price, do you have a sense of, or kind of a view as to maybe how high we go if we do break out? Are there levels where you think maybe now it might be time to buy put options and we're looking to play a reversal? Like, how do you think about the market over the next 6 months?
So I would break that question into 2 parts. There's always short-term trades that I think are interesting, and those are kind of like independent of my long-term bias or thesis. I think the longer-term thesis that I find interesting, today the gold market is at, I think it's around 24 trillion market cap. It's pretty high up there, and gold doesn't seem done to me. And again, I still think Bitcoin trades like digital gold. I think there's a few scenarios where the scariest possible thing would be trying to short Bitcoin. And one of those is, do people start buying Bitcoin as digital gold? And I'm talking about central banks, governments. Do we get that there is no offers on the books type of scenario where we get that squeeze higher in Bitcoin? That's where I think, my long-term investment is those, IBIT leaps, at least as of right now, that's what it is. And in that case, I want all that upside. That is one of those, the sky's the limit. That's one of those charts where you look at like railroad stocks in the 1930s and they just did crazy things. That's that scenario in the modern era. Sky's the limit, no price target, just don't get squeezed on the wrong side of it is the thought. In terms of kind of more realistic targets where, does Bitcoin go to 200K, something like that? Yeah, that's we could grind higher till those kinds of levels, but that's not really the scenario that I think people are kind of seeing could happen. We have like this fundamental shift in the world where maybe the US dollar reserve becomes a different type of world reserve currency. I want to see that play. That's not for the country, but for the fundamental value of Bitcoin. I think that's what happens in terms of making the asset worth a lot more.
Yeah, I completely agree. I mean, I think you're starting to see maybe the early signs of a shift away from, not so much the dollar, obviously as a reserve, but just the idea that the only pristine collateral or within the broader financial system, the collateral that you constantly want to hold is dollars. Not that you won't have dollars, or dollar-based collateral, but you're seeing some diversification away from it. I think to an extent, it kind of explains the price of gold here today and some of the flows that we're obviously seeing into these Bitcoin ETFs. I just came back from Toronto at the Consensus Conference, and as you can imagine, everyone there is super, super bullish, throwing out price targets of 150,000, 200,000. So you almost think that it's maybe self-fulfilling in many ways. But it also kind of concerns me, as a contrarian, when everybody's on one side of the trade or one side of the boat, you kind of look for opportunities elsewhere. Do you see a trade in the short term to the downside? Do you see any room for a correction? And if so, where would you look at kind of in terms of price levels that this might be going to?
I don't. I think right now there's a lot of upside momentum, and I'm not interested in downside trades, and I don't really see them right now. Especially with equity assets, risk on assets having this nice recovery. There's nothing that I find interesting. There's always you could be in cash trade. That's totally fine. But playing the short side here in this momentum, there's just better opportunities in my mind right now.
Yeah, and I think we kind of already saw it, right? I mean, throughout a lot of these bull markets historically, not that this has been around that long, but previously you do often get these corrections of 20 to 30%. We just had the 30% correction, local low of 75, and the buyers stepped in. So it would be odd to me that you would get an immediate correction. But at times too, I wonder, does this with a very low volatility, does this present an opportunity to maybe buy puts as a potential kind of lotto ticket? But I tend to be with you that you want to stick with the trend here.
Yeah, that's a great point, Ryan. Like I definitely think still stick with the trend. But if you want to do a lotto ticket trade, like the risk reversal trade is always interesting. You could buy the put, sell the call, delta hedge with the asset. That's kind of a delta neutral position. Nothing happens, no harm, no foul. If you get sort of that crash lower, put vol is going to come in. You'll pick up negative deltas on the way down. That's kind of a nice way to play that. And if we break all-time highs, take that position off.
Well, I hope that we do. Are you active in anything else outside of Bitcoin options? You trade ETH options, or I think there's Solana options and probably many others on Deribit. Is that right?
There is. Yep. There's some interesting trades on Solana right now that I've been kind of pointing out. We've had a big seller of May 31st expiration $200 calls. It looks to me like an overwriter, someone who owns the asset is selling covered calls against it. But they're selling in size. So they sold, I think, last time I checked, was a block trade of 100,000 calls, something like that. That to me seems like one of those times where you're an investor who sells a covered call, and then like a couple weeks later, you regret selling that covered call. I think there's one of those opportunities where taking the other side of that flow could be very interesting. So to me, Solana still has wild card upside in it. And I would not be a seller of 200 calls, even if it's just 2 weeks out. There's just too much risk there. And I think this could actually be an entry on the buy side.
What about ETH? Are you seeing anything there in those markets?
So ETH is very interesting. I like that ETH has been a beat up asset. And if you look at the Bitcoin ETH or the ETH Bitcoin ratio on a weekly chart, for example, the past 5 years, weekly candles, there's a lot of upside for this ratio to keep going higher in ETH's favor. So to me, it might be one of those assets that's very under-owned and we get above 3,000 pretty quick. So I wouldn't discount that scenario. And if we look at the Bitcoin dominance ratio, let's remember, Bitcoin is trading as a risk asset and a digital gold asset, whereas all the altcoins are trading more as risk assets. So if we're looking at outperformance in the crypto space in this sort of equity recovery or risk on recovery, I expect altcoins to finally start making up some ground. ETH would be one of those.
Do you think we have to see Bitcoin hit a new all-time high? Let's just throw out a arbitrary level. Let's say 150. Does it have to go there first to then ignite that FOMO and maybe some of the rotation into relative underperformers like ETH? Or could you see, just simply given that that ETH BTC ratio is relatively cheap, you could see traders step in there and bid that up to, let's say, 500ths of a Bitcoin? Man, if it got to a tenth of a Bitcoin at this price, you'd certainly want to be long some ETH. But what do you think kind of happens first? I mean, ETH has been, as you mentioned, so beaten up. It's been left for dead. No one's really paying attention. But that said, I mean, Bitcoin dominance is what it is at almost, at 3-year highs here.
Yep, that's a great question. That is, does crypto trade like 2021 or does it trade like 2023? 2021 was really like risk on, rah, 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 let's go crypto. Altcoins did very well. 2023 was more a SVB banking crisis, geopolitical wars, monetary policy hedge, digital gold. That's what's driving crypto higher, therefore Bitcoin leads. I think we're still in the Bitcoin is digital gold, Bitcoin leads higher world. I think those are really the big questions that the world is asking itself in terms of trade wars, global supply chain disruptions, global monetary policy. When does the Fed finally cut rates? Blah, 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 blah. To me, those are Bitcoin narratives. Now, risk assets recovering over the past 4 weeks since the trade war sort of initial spike down. That's been good for altcoins. But I think that's a nice short-term trade. But I think that the narrative in the medium to long-term continues to be Bitcoin-led.
Okay. Bitcoin over everything for now.
Mm-hmm.
Outside of options, I mean, what else do you have your eye on? Sticking with crypto, are there any other themes that you think could emerge, will emerge this cycle? Is there anything else that people are kind of sleeping on? We had the AI narrative for a moment. I don't think that's dead, but clearly it's again been Bitcoin over everything. We've had real world assets, layer twos. What are you focused on, if anything, outside of kind of short-term options and what we've talked about already?
Yep. I think one of the things and one of the themes that we're going to start seeing, so we're going to see consolidation in the space. We had this Coinbase acquiring Deribit announcement hit the wires. That's very interesting. But some of the other unknown things or lesser known headlines, for example, Derive, formerly Lyra, just got an offer for acquisition by SNX or Synthetics. And so obviously there's a lot of altcoins that are governance tokens floating around in the ether. There's an incentive for someone to buy up the tokens and essentially do sort of a acquisition, whether it's hostile or not hostile, but to essentially buy that tech. And when we're in this kind of people are not thinking about that environment, I think we could see some more of these types of acquisitions. That's very, very interesting to me. So we'll see what's going on there.
Yeah, that is interesting. I didn't see that at all. The Synthetics Derive news. So that's pretty cool. What do you make about the Coinbase Deribit acquisition? I mean, clearly it's positive for Coinbase.
Yeah, I mean, I am very excited. I think this is really good for the space. Obviously, Coinbase has Coinbase International. I think for the most part, business as usual, international only, US investors still kind of closed out. But I think kind of thinking down the road, Coinbase is telling itself, hey, we're going to fight that regulatory battle a little bit more for the derivative side. And I think that'll be great for the crypto vol space.
You think we'll be able to trade crypto options via Coinbase, via Deribit in the US soon?
Soon? I'm not sure. But eventually, yes, I do think so.
Fingers crossed. I guess we have IBIT options for now.
Mm-hmm.
Yeah. Anything else, Greg, before we wrap things up that you've got your eyes on? I appreciate you coming on the show as always.
Yeah, thank you so much, Ryan. The only other thing that I have my eyes on are, ETH ETFs that are returning staking rewards is going to be kind of interesting, especially if you look at the futures market and the futures term structure of ETH versus those ETFs, those hedgeable ETFs. I also think the Solana futures market is very interesting. That's trades at different valuation than the Bitcoin futures market in terms of futures basis. So I think those are interesting opportunities out there as well. So let's not discount basis trades. There's some good stuff out there.
So is there, I guess really quickly, is there a decently wide spread when you look at the basis trade for Solana futures?
Yeah, so there's a negative basis in Solana futures and or call it a backwardated basis in Solana futures and a contango basis in both ETH and Bitcoin. Now, let's remember that a basis trade is delta neutral, and so you can essentially do some very interesting stuff against those and bet on some sort of convergence, or just wait it out and get paid. Or you could do some sort of relative pairs trade and capture the basis along the way through both of them. So, short the ETH future, buy the Solana future type of thing, get a built-in, call it 7% spread to own that, and so on and so forth.
I love it. Greg, thank you, as always, for coming on, delivering the alpha per usual. Always love to hear your unique insights and take on the market. So thanks again, my friend. Before we let you go, where can everybody find you or learn more about what you guys are doing? And you're doing some great things over at Amber Data.
Yeah, absolutely. So anyone who's interested in looking at some of the volatility surfaces or futures basis or anything like that, you can go to pro.amberdata.io. And if you want some weekly recaps, you can go to amberdataderivative.substack.com.
Awesome. I'm already a subscriber, so we'll leave it at that. That's going to do it for our show. Greg, thanks again for coming on. I will be back on Wednesday. Until then, I'm Ryan. Peace.